money. And you could be working at McDonald's, or you could be a heart surgeon. Are they both trading time for money?
Yes.
It's just at a different level. But they're both still trading time for money. And the other concept is net worth, which is people, this is what the old definition or people try to create, is that every time we're working and then we stash a little bit of savings for our 401k, for our IRA, and we're growing that nest egg, that someday when we stop working or we retire, that we can no longer work, then we will start drawing down from that because we have enough money stashed that it can continue us, hopefully, until we die. The question becomes, will it last? How long will it last? So this is a drawdown principle of net worth. But the thing is, net worth, it still must be converted into cash flow. Or you just start taking from the principal and it's just dwindling down. So residual income, on the other side, is the true financial freedom. Residual income gives you true financial freedom. And since this concept of residual financial creates financial freedom, the question is, if you stop working today, how long could you last before you have to go back to work? If you stop working today, how long could you last? Pay your bills, pay your rent, pay your car payment, or if you don't have it, how long? And some people are looking at the watch. No, don't look at the watch. We're going to change that. We're going to change that. And I salute you, especially those that if you are truly looking at your watch, I take my hat off for you to have the courage to come here, because you know that you deserve better. You know that you can get to this stage. But you have to right now, whatever you have done to cause you to be in that situation is because that's in the past. You are where you are because the sum total of all the decisions you have made in the past. Am I correct? So if you don't like where you are, you have to make better quality decisions. You have to change the direction. Today, in this room, is that change of direction. And it can happen just like that, right now, today. And then you'll end up at a completely different place than 5 years ago. My philosophy for success is if you do for the next 2 years what most people won't do, you'll be able to do for the rest of your life what most people can't do. Let me repeat. If you'll do for the next 2 years what most people won't do, you'll be able to do for the rest of your life what most people can't do. And at the end of the 2 years, it's not what you get, it's who you become in the process that's even more important. Most people will not. Most people will not do the simple things. They will not go work out every day or 3 or 4 times a week. If you do that work 3 to 4 times a week, you will become healthy in 2 years. I don't care what situation you're in. But this consistency. If you make an offer every single week, if you make an offer a day, if you want to buy real estate, I promise you I've never bought a house that I didn't make an offer first. So when people say, how many houses do you own? The first question is, how many offers have you made? If you don't make an offer, how are you going to buy a house? Your job is to make the offer. It's their job to accept it or not. So you figure at what price you'll make money for that house, and then you just simply, if they accept it, you know that you already made money. And so we're going to talk about that. So only 4 ways. Since we're talking about financial freedom through residual income, there are not infinite ways to create residual income. Only 4 ways to create residual income. Because the definition of residual income is you put the time and effort one time to build it, to create it, and it produces income for long stream or maybe hopefully forever. That's the definition of residual income. So give me an idea of, tell me somebody what's one way to create residual income.
Rental property?
Very good.
Private lending.
Okay? So I'm a broad category, so I'll give you, the first thing is intellectual property, IP. If you're genius enough, you write a software. You're such a genius, you wrote a song. That's super hit. That you wrote that song one time, and that song is giving you royalty. You're so good that you created a patent. You invented the light bulb. So it prints money. You created something that is so intellectually superior that the rest of the world has to copy it, use it, and like the software, they're using it over and over and over again. That if you wrote an accounting software, that now a whole bunch of people are using it, they cannot. It's like becomes the electricity of their business, of their life. But what are the chances of an average person having an intellectual property like that they can create? They can so it's not a very practical bet on creating residual income. Can some people do it? Of course, those people that have intellectual properties, they can create that. So that's one way to do it. Are you with me so far?
Yes.
Do you understand that the intellectual property, that how it can create residual income? And just one time, the Beatles wrote a song, Michael Jackson, Elvis Presley, they're long gone, but they're making more money dead than at one time they were alive, because it's just continuing to do so. Second is creating a business. If you create a business, because that means you create a team, and if the business is running and it's generating income for you, and if you truly create a business, you've just created another residual income. And in any business. Third way is other investments, meaning that you have made money. You've made money, now you can take that $1 million and put it on something, if nothing else, even on just an interest-bearing account, it's giving you money. Like I said, private lending. So now you can let your money make money, whether you're buying stock market, stocks, bonds, in some form of an annuity that gives you money from your money. But in order to get there, you got to get to the first million. So that's why it gets easier once you have money. But we're talking about how you get there. But that's another way. And the fourth way is what? The fourth way is what?
Real estate.
Hey, that's what we're here for. The fourth way is real estate. It's been called the solution to the solution. And 7 out of 10 millionaires in this country made their millions from what?
Real estate.
And the other 3 made it elsewhere and then bought real estate to hold on to their wealth. So pretty much everybody that's wealthy has their money tied in real estate. They diversify into assets. So today, we're going to talk about this fourth one, real estate. And most people don't develop these because of the fear and their limited time, knowledge, capital, and skill. Because if this was easy to run a business, 90% of the people today work for someone else. But when this country started, 90% were entrepreneurs. If we want to take back the entrepreneurial revolution, and what we're doing is not only helping you with real estate investing, but should you choose to make real estate your business, you can make it a real estate as your entrepreneurial venture. You can do that and take back your life instead of working for someone else. So this is an incredible vehicle, and I'll share with you my idea of why real estate is better than any other business. And from that perspective, what is the financial outlook for the average American? This is unbelievable in terms of what the statistics are. According to the USA Today, that few workers are truly confident that they are going to have a comfortable retirement. If you go out and ask the survey, there are very few people who are confident about retirement. And they're talking about 60% of the workers have less than literally $25,000 saved for retirement. So that means they're banking on $25,000 to carry on for the rest of their life when they retire at age 65. And so imagine what $25,000 can do. Practically nothing. Even $1 million may not be enough for retirement. Even $1 million may not be enough for retirement. So 2/3 of all the people rely on Social Security for 50% of retirement income and 1/3 for at least 90% of Social Security. And I call it social insecurity. And I don't know, by the time, we really retire, whether it's going to be Social Security there or not, who knows? So you don't have to rely on that if you do what we're going to do today, how we're going to share with you to do today. And the two biggest retirement fears are these two. It's not saving enough money, and then, if they say, running out of money. That's a drawdown principle, because are people living longer today than ever before?
Yes.
So that's their fear, is that what if I outlive my money? So you have to preserve your capital and let the capital start dishing out money and that keeps up with inflation. So I'm talking about, can traditional investments create enough for retirement? So what are the options? Because we say that, if you're taking money and you're putting the money aside and you're saving money. But what are the traditional investments? Really, when I compare real estate, and I've done enough research and enough certainty that there's nothing as good as real estate. When I diversify, I just diversify into different classes of real estate. Real estate is something that one of the things I love about real estate is no matter what the risks are, there's no such thing as risk-free in anything. But most of the risk, if not all, you can mitigate. You can mitigate almost all of the risks in real estate if you play it right. And so S&P 500, and pretty much that's about the return you get from S&P 500. This is the bonds, and this is the municipal bonds, T-bills. These are your standard safe, what they call people invest in their retirement. And compared to, we're going to share with you what we can do for you in real estate. And that's what we're here all about. And because we're going to be talking about today that, literally how much money would you need to save, let's say to generate $5,000 a month retirement income, assuming a 4% annual dividend. Anybody guess? How much you need to save so that if 4%, that it will give you $5,000 a month? How much? 2.5 million? It's 1.5 million. $1.5 million, and the question is, how realistic is it for an average American that they're going to retire when then 60% have less than $25,000? Where is 25,000 and where is 1.5 million to give 5,000? And 5,000 is not a luxury living, and it's just enough to have a good life. If a car is paid for, a house is paid for, children education is gone, this is just for you. Yes, you can probably have a living with that. And so, with that being said, why I consider real estate to be the ideal business, because to me, ideal is an acronym. I stands for income. Real estate can give you income, and it can give you cash and cash flow. Because you can do so many things. You can buy and flip to make a large chunk of cash. Can you?
Yes.
But it can also give you cash flow. You can buy one house and keep it, and for the rest of your life, and your next generation can live off of that one house. Can they?
Yeah.
And for the next generation, will that house keep up with inflation?
Yes.
Will the house grow in value?
Yes.
Absolutely. So what an incredible vehicle that you don't have to do anything. You don't have to be in economics. You don't have to understand anything. Just buy a house and forget it. Somehow, in real estate, you buy and sell to create cash. You buy and hold to create wealth. You buy and sell to create cash. You buy and hold to create wealth. And so D stands for depreciation. This is the only business that I know that the government gives you money back just for buying real estate, for holding on to real estate, in forms of tax against earned income. E is for equity buildup. Equity buildup is through tenants. Is that if you buy a house today for $100,000, and let's say you put $20,000 down, and you get an $80,000 mortgage, 10 years from now, neither of us have, nobody in the room or outside have a crystal ball that can say that 10 years from now, this $100,000 house is going to become $150,000 or it's going to be worth $200. Nobody knows what the value is going to be or it's going to go down. But one thing I can guarantee you mathematically, that $80,000 mortgage that's there today, 10 years from now, that's definitely going to go down. Would you agree with that? And so that if it does not, the value 10 years from now of that $100,000 house, if that equity today is just $20,000, if that doesn't go up by $1, but 10 years from now, this $80,000 is going to keep going down, and that's how your equity is going to increase. And eventually, that's going to go completely paid down to zero. And who's paying it down to zero? The tenants. Somebody's going to work for you full-time to pay off your loan and giving you equity. So that's equity build-up, and appreciation is value that it goes up from 100,000 to double. And 30 years from now, I actually looked at, not just 1 year, I looked at it at my year before I got in, last 100 years of statistics of prices of houses. And there's many times it has gone up or down and completely crashed, and but from there till today, if you see the trend has never been down. The trend has always been up. So this is one of those things that historically has held its value. If you say that real estate doesn't work, then look in the mirror and you'll find the reason.